All right, perfect. Well, welcome to today's Monday morning mortgage update. My name is Sean Woland, and we've got a lot to cover today. So I'm going to jump right in, and we're going to see kind of what's going on in the marketplace. So we've got mortgage news. So let's talk about it. What is happening on the mortgage front? Well, the biggest thing we've seen in a long time is a major merger. So Rocket Mortgage is buying Mr. Cooper. I don't know if you know who Mr. Cooper is. They used to be Nation Star, and now they're Mr. Cooper, which is I think, one of the weirdest names for a mortgage servicing company in the planet. But Rocket is now buying Mr. Cooper, so they are now one of the biggest holders of mortgage servicing in the country. 1 in 6 loans will be serviced by Rocket Mortgage. So borderline monopoly. Hard to say. It's going to be really interesting to see how they kind of swallow up the market. It's going to be very interesting to watch. So keep your eye on that. And what else we got going on? Well, you may have heard that FHA no longer is offering home loans for non-permanent resident aliens. So that is somebody that is here that does not have their green card, but may have been issued a social security number. But if you're not a permanent resident alien or a citizen, you can no longer get an FHA loan. Now this is based on case numbers that are coming on board after May 25th. So there is a little bit of timeline in there to get those buyers into a contract and close, or at least get them into contract and get an FHA case number assigned to them. Again, that's prior to May 25th. So now there are conventional loan options available. So if you wanted to, in the future, if you do have a non-permanent alien customer that is here, that doesn't have a green card, but maybe on a work visa, whatever that may be, conventional loans are still an option. So not FHA insured loans. So this could be big if you have customers that are shopping around for homes right now that are in this category. Make sure they're looking at conventional options. Another big thing in the news, you may have heard or not, there's rumors. They're more than rumors, but it hasn't been completed. And that's the purchase of Compass buying Mr. Warren Buffett's Berkshire Hathaway real estate division. Really interesting to watch, see what happens there. That could be a huge merger or takeover or purchase, whatever you want to call it. It's not in the works yet, but really interesting to see in the Wall Street Journal that Compass is talking to Warren Buffett to try to buy his real estate unit. So very, very interesting. A lot of mergers. This is going to be the year of the mergers and the buyouts and everything else that's happening. It's kind of crazy watching it all go down. So what is happening with Fannie and Freddie as far as how are they going to be taking over those non-permanent resident aliens? Here's the rules for Fannie Mae and Freddie Mac for conventional loans. If you don't have a green card, you can use your social security number or a tax individual ITIN number. You can still use that to get a conventional loan. And we can document it with a employment authorization, EAD number, a green card, work visa, passport, etc. So conventional is still going to allow you to work with non-permanent resident aliens. Work visas are usually the most common for those, along with passports and employment authorization documentation. So just keep your eye on that. If you have any customers that are citizens of other countries that are moving here and looking to buy without having their green card issued yet. So mortgage rates, what is happening with mortgage rates? What are the rumors? What are the trends? That's what we're all about today. So the Fed came out last week and had an inside call with one of the bond traders, and they basically said that the Fed's goal is 3.9 for the 10-year. So what does that look like? Well, this is the candlestick chart for the 10-year. Back in January, late December, we got a Christmas present over the highest interest rates over the last several years. But we saw the 10-year go all the way up to 4.8. Well, where were rates when we were at 3.9 on the 10-year? That's down here. And if you remember, the rates back in September and October dipped into the 5.99 range to 6.125. That's where they dipped back here. So we're going to be this section, we're going to be probably in the low sixes. If we hit a 3.9 on the 10-year, mortgage rates will be in the low sixes. And that's kind of where they predicted rates to be. So when will we get there? How long will it take to get there is going to be really interesting, especially with the inflation numbers that we just got. Let's go over those real quick. This was the PCE for February, and it came in a little hotter than expected. So it came in at 0.328. So the headline PCE, personal consumption expenditure, went up 2.54 from 2.52. So inflation actually went up a little bit. The core inflation also went up a little bit to 2.79 from 2.64. Remember, inflation is the enemy of mortgage rates. So we don't want this to go up. That's a bad trend. But here's where I want to really point this out. Inflation isn't the only thing that affects interest rates, but it's one of the most damaging things to interest rates. But I want you to look at how we average the inflation numbers and the numbers that we're going to be replacing for the next 12 months. So here's last year's numbers. So this is 2024. In March of 2024, our inflation reading was 0.34. So if you were just to say, okay, well, if nothing changed, right now we're at 0.328. March, we should get a little bit better inflation numbers if nothing changes, because we're going to be taking a 0.328 number and replacing a 0.34 number. But look what happens at the older inflation numbers for April through, well, for the rest of the year. It's going to be hard to get lower inflation number readings because of this. So in April of last year, we have a 0.26 inflation number. So inflation is going to have to come in lower or equal to this for inflation to stay the same or get better. But look at May. May of last year was 0.08. Most likely, we're going to see inflation numbers on the average go up throughout the year. So you may say, well, okay, Sean, if inflation causes interest rates to go up, how are you predicting lower rates? Like, how are we saying the Fed's overall rates are going to be coming down? That's a good question. But just looking at this, we are most likely going to see inflation, that component of mortgage rates. We're going to see that have a really hard line in the sand. It's going to be really hard to move inflation lower because we're replacing really low numbers with lower numbers or slightly higher than what they were last year. So it's going to be tough. The thing we need to look at is employment. But before that, let's look at where we are right now on mortgage rates. And this is going to kind of solidify what I was talking about. Last week, the mortgage rates actually bumped up higher. I'm sorry, the mortgage-backed securities had a good day last week on Friday, despite those higher than normal inflation numbers. And why is that? Well, there's a lot of economic data out there. There's a lot of numbers that are being released now to project what the unemployment numbers are. And the overall economy is weaker now that you're averaging in some of these numbers than what they expected. So unemployment numbers are going to be a key factor. And the bond market actually was pretty happy on Friday, and it had a good run higher. And then today we had a good run higher again. Now look what happened to the 10-year. On Friday, that dropped. And remember, when the 10-year drops, mortgage rates drop. They go hand in hand. Drop in the 10-year is a drop in the 30-year fixed. This had a huge move downward on Friday. And today we did a little bit of movement down again, but we're kind of stuck on that 200-day moving average right now. So we really want that to come in even lower and test this lower level here. So despite the inflation numbers being slightly higher, we still saw a movement lower in interest rates because of the economic data. So if you look into the future and what economists are looking at, they see that the tariffs are going to be a one and done type of a thing. But overall, they're going to actually be a very good source of revenue for the United States to bring the debt down. Lower debt is a very good thing for the bond market. The lower the debt, the better the bond market will be, which could drive interest rates lower. It's also, if you look at the overall picture with lower debt and higher unemployment, we're going to get a double whammy to help bring those interest rates down, regardless of the inflation numbers. So we call this stagflation, which is interesting. So the economy is stagnant when inflation stays a little hot. But overall, we're going to see interest rates come down because of those two factors, the lower future debt and unemployment numbers rising. So it's going to be interesting to see what comes out this week, because Thursday and Friday are the jobs numbers. That's going to be really interesting to watch. So keep an eye on that. We've got Wednesday ADP, the private payroll change, job openings on Tuesday, JOLTS report. That's the job openings and labor tracking. It's going to be interesting to see because all of these are lower, projected to be lower this week, which could have a good impact on mortgage rates. So hopefully we won't get any surprises. Hopefully it'll be as we expect, and interest rates could continue to come down a little bit. So that's really, really good news. We're just going to watch that unemployment rate. That's going to be key. So the higher the unemployment rate, they expect it potentially to get to 4.3. That's going to surprise the Feds and maybe create a little bit more of a buzz that the Feds will cut sooner rather than later. So we'll see how that goes. So don't forget our guarantee on our pre-approvals, $5,000 to the seller if we don't perform, because we do a fully audited, fully reviewed pre-qualification all the way through underwriting if our buyers get us what we need. So who wouldn't want to buy us at Berkshire Hathaway? There you go. I like that comment. Yeah, some big mergers happening. And if you have any questions with what's happening in the markets, keep your eye on the news because a lot's going on. A lot is going on. So now, some changes to this Monday morning update. The first of every month, I'll be doing a live. But when you go to the link, the rest of those days, it will be a pre-recorded version. So it's the same link. Actually, it's gonna be the Monday morning update, or Monday mortgage update website. Just go to my Wolin Mortgage Team website, click on the link. It'll take you right to either the live version or the pre-recorded version for those other days. So you don't have to focus on being here live every Monday. It's just the first Monday of every month is live. We're going to do a bigger recap, and then every Monday for moving forward, you just click on the link and you'll see the recorded version. So go to WolinMortgageTeam.com for that link, and I will open it up to any questions if you guys have them as we move forward. So any questions, use the chat or just hop in, and I think you guys are allowed to talk here. I'm going to change it just in case. So if you have any questions or have any comments or anything, let me know. You are all unmuted. All right. Well, if there's no questions, you guys enjoy your week. And luckily for me, I don't have the flu anymore. Last week was kind of rough, but you guys enjoy your week. If you need anything, I'm always here to help.
Hey,
Okay,
Sean,
thank you.
Melissa had a question about real
Yes.
estate news.
Oh, I just commented where do you get like just real estate news? What's the best place for that?
I've got quite a few different websites that I look at. Mortgage News Daily is kind of where I usually go for mortgage and real estate related, because it's got a mortgage spin to it. Wall Street Journal, quite a bit. There's a lot of real estate information in there. And so I like to go there. And then to be perfectly candid, I see a lot of stuff on social media that I have to really vet because there's a lot of bad information out there. But yeah, those are the two sources I typically use.
Thank you.
Yeah, you're very welcome. Mortgage News Daily is a great website. They have a lot of really great information on what's happening in the mortgage industry and real estate together. And most of their articles are shareable. So it makes it really easy to share information with customers and with social media. So check out Mortgage News Daily. It's a great website. All right, everyone. Well, have a phenomenal week, and we will be in touch.
John, bye.
Bye. See you guys.